for perspective. Rejoining me is Adam Button. He's Chief Currency Analyst at ForexLive. Adam, thanks a lot for checking in with us again. The last time we spoke, I believe you said you expected pressure, downward pressure on the Canadian dollar during the back half of this year.
Yeah, absolutely, Paul. We saw that a bit last week. We saw the Canadian dollar fall to the lowest level since the pandemic, or the outbreak of the pandemic. And we've seen that come back a bit today with the Canadian oil market doing a lot better today, and markets having a rethink on central bank rate hikes in the months ahead.
Can anything stop the rally of the U.S. dollar? Of course, something can stop it. Where does it stop? It's now trading, I believe, at its highest level ever versus the Dixie basket of international currencies and against a couple of individual currencies like the UK pound sterling.
Yeah, absolutely. Europe is struggling tremendously right now, but it has stopped in the last couple days as the Federal Reserve has hinted that it won't hike 100 basis points. I mean, there was this strong debate, and on Thursday, the market had priced in an 80% chance of a 100 basis point hike next week. And that's now down to 20% after we had some officials come out and say, hold on a second. Today, there were some soft housing data out of the U.S. as well that's also putting a damper on that, saying, hey, listen, the economy is slowing down here. Maybe we don't need to do quite as much. And that's taken the U.S. dollar on the boil and given the Canadian dollar and some other currencies a bit of a reprieve.
The Canadian dollar continues to do well. That is, gain ground against most other G7 currencies, correct?
Absolutely. It's right near the top of the deck right now. I mean, Canada has an incredible opportunity. I mean, oil is up $5 today. Natural gas is strong again. And the world is looking at Canada and saying, here, you have all these natural resources. If you can bring them to market, we want to buy them, and we'll buy Canadian dollars and try to make it happen. If we can put the things in place to make that happen, and you start to see some of that political will developing. There's an energy crisis happening in Europe right now, and it's absolutely crushed the euro and will crush the Eurozone economy. So Canada, and I think the rest of the world, is looking at that and saying, you know what, there's been a lot of high-mindedness around energy, around a lot of policies, and we're at the point now where we need cheap, reliable energy to keep the world going, and Canada can provide that.
You appear to be saying that Canada should get its act in gear with respect to liquefied natural gas. There's one big project which is advancing slowly on the west coast of BC. That pipeline that would feed it is contentious and is also advancing slowly. I'm not sure that construction has begun yet, but there's certainly a route and a plan. There's also the Trans Mountain Pipeline expansion project, now owned by the federal government, which would send crude oil to export to a port for export as well. I'm hearing that you would like to see quicker progress, I guess, on those two projects, and announcements on others as well?
I think that, it's starting to fill the pipeline. I don't think we're going to see announcements in the next 3 or 4 months, but let's look at what's happening in Europe. We're paying for the last decade, more or less, we've paid about $3 for natural gas in Canada. Right now, they're paying $50. The lights aren't going to stay on this winter. Russia on Friday may cut off European natural gas. That would be the biggest crisis in Europe probably since the end of the Second World War. The economy is going to be absolutely devastated there. And I think a lot of these thoughts about how quickly we can transition to renewables are being undone. And I think Canada and investors who want to get that liquefied natural gas and natural gas out of Canada are saying, listen, there are enormous reserves in this country, and there are willing buyers all over, and I think the financing will be there as well. Let's put the regulatory system in place to make it happen, and make it happen a lot more quickly than it's been happening. And the money that will flow to Canada is enormous. LNG Canada, which is the one you referred to, is probably going to cost $50 billion. We can build 3 or 4 more of those, and the money will be there, I think, in the years ahead. It's just a matter of whether the will's there, and I think that's coming.
I think it would shock a lot of people, I think, to see Germans rationing gas this coming winter if it comes to that. And that's certainly a possibility given the conflict with Russia and the uncertainty over the Nord Stream 1 pipeline, which is the pipeline that already exists and ships natural gas from Russia to Germany. How would the market react if we actually saw again, the shocking spectacle of rationed natural gas in Germany?
Right. So Friday is the day for everyone to circle on their calendars, and that's when the pipeline is supposed to be restarted. Now, there's some hints today that might be kicked a few weeks down the road, but if there's a sense that Russia is cutting it off, I mean, we see estimates today about a 1.5 percentage point decline in Eurozone GDP. I think we'll see triple that. The power prices right now are devastating to heavy industry anywhere in Europe already. Rationing on top of that, the political turmoil that will come from that, the consumer spending hit. The euro it's really in a very, very difficult place right now. The ECB might hike rates on Thursday, one day ahead of that decision, and that to me is just a sign of a central bank that has no idea what's going on or what's coming, because it could be a very, very difficult winter for the euro and for Europe. And then, the worry for Canada and for global growth is that we see such a dramatic slowdown coming out of Europe and perhaps out of emerging markets due to energy that it really hurts the global economy, and the Canadian dollar is sensitive to that.
Crude oil is back above 100. In fact, it's back above 101 US dollars per barrel as we speak. That tends to be a positive, of course, for the Canadian dollar, high crude oil prices. Where do you see crude prices going for the rest of the year? And did Joe Biden achieve anything in Saudi Arabia?
Right. We heard from a U.S. Treasury official on the weekend to say, we're pretty confident that something is coming. The market today is obviously much less confident. Oil's up almost $5 today. The U.S. has thrown a lot at keeping oil prices down, but there's a lot of question about whether that will work, what the demand side, what will happen there. And, the market is voting today that prices are going up, demand is still high, and supply is tight. The U.S. is adding 1 million barrels a day via its strategic reserves. And that's going to run out in October. Now, I think that will probably be extended, but that's a limited time deal. There's only so much they can do. So I'm quite positive on oil and natural gas. And in terms of Europe as well, they will switch from natural gas at some plants to diesel, which could be further demand for oil in the months ahead. So it doesn't look like the U.S. accomplished a lot on this trip, and that oil prices will stay comfortably above $100, adding to what might turn into record trade surpluses in Canada in the months ahead.
Okay, let's bring it back to where we began. The Canadian dollar now trading at about 77 1/3 cents US. Where do you see it at year's end?
Yeah, I think we're going to trend lower from here because of these, there are things that are working for Canada, like energy, but the global growth picture is deteriorating. I'm worried about China, lockdowns there again, maybe not enough stimulus coming out of China, and a dramatic slowdown in Europe. Even if there's a scenario where we can get back to $130 oil and still have some Canadian weakness. The housing market, it doesn't seem to be collapsing as sort of feared, but the Bank of Canada hiking 100 basis points last week certainly isn't going to help. So there's a long list of worries. We're getting a bit of a reprieve here now, but I think we head down to that 73 cent level before the Canadian dollar puts in a strong bottom.